Hi, I'm Austin Gehring with Ag360 Grain Marketing. In this week's podcast, we look at confidence gauges, crop insurance prices, and strong livestock indicators again. Today is Thursday, May 1, 2025. Here's today's Market IQ report. No major headlines by my count this week. We're just trading weather, so we will move on to the upcoming dates and current headlines to watch out for. Tariff talks are quieter right now. Corn is planting and progressing, with soybeans starting in the south. Weather is a factor here and in South America. Also in South America, they are beginning harvest or continuing to harvest. The next monthly USDA report is May 12. As always, this slide highlights Kansas insurance prices for corn, soybeans, and wheat. It's something good to keep track of throughout the season. Corn's projected price is $4.70. Soybeans' projected price is $10.54. And wheat's running out of time to get back above its insurance price of $5.90. Selling below that price may cost you if we close higher at harvest and may require the use of funds that you potentially receive from insurance toward paying any contract penalties. Using crop insurance as your marketing floor could be a powerful tool in creating a marketing plan. When the market doesn't give us prices above the insurance price, it may be wiser to consider buying options by transferring some risk or relying on your guaranteed revenue from insurance. Let's look at the corn market and see how the market's comparing today versus similar past situations. Looking at the short-term and long-term technical gauges, we're at 0% on the short term, meaning we've traded lower the last week or two. Long term, we're about 50%, kind of telling us quite where we are in the range where we've seen over the last months. Looking at the U.S. and world fundamental gauges, they are both solidly in the red at 11% and 14%, meaning only 10 to 15% of prices have been lower with the current U.S. carryout to use ratio and the world carryout to use ratio in the past 10 years or so. Looking at the dollar index and inflation, that is still strong, as the dollar is still a higher number than we've seen in past seasons, and inflation data is still decently strong as well. And putting this all together in the summary gauge gives us a 31% on the summary gauge, kind of giving you a weaker market feel, giving the chance for some rebound, and maybe it's a little bit oversold on the near term at least. Keeping with corn discussion, let's look at market alerts. Market alerts are the first of two marketing tools that can be used to create a marketing plan around in Market IQ. As a reminder, these are sent whether or not the current price is above or below the insurance price and try to alert you when there is a pricing opportunity. Old crop targets are for your remaining total production after harvest. New crop targets are for your target pre-harvest sales. Corn has set out a total of 5 of 20 market alerts thus far in 2025. Continue to make old crop sales if you have them when we have the alerts. Here's a look at the recent market alerts so far this year. Corn has taken a dip, but weather could be key to adding volatility back in the markets. Know your marketing plan and have it ready if and when it's time to take action. Sticking with corn, we'll talk about price targets, the second Market IQ tool that a marketing plan can be created around. Price targets are not predictions, just an action plan if reached. As we mentioned, the crop insurance price established at $4.70. We've got 5 targets periodically higher. We haven't reached them yet, so we're starting to adjust them to 30 cents above the insurance price based on weighing risk and reward and historical research. $5 still could be attainable in December corn with the right risks entering the market. We're currently 55 cents below that price, so we'll see if and how much we can climb. You can use this as a marketing plan if you'd like to only improve on the projected insurance price with your insured bushels. Just a reminder, when looking at this chart, that past performance is not indicative of future results. This is today's price versus relatable report day prices. Today's price is the blue line. They're around $4.50. The yellow dots and lines are relatable report day prices over the last 10 years. The red, yellow, and blue coloring in the background tell you how many times we saw prices in that price range. Red is often, yellow is somewhat frequent, blue is less frequent. What looks like a common price range? Well, We could say that anywhere $4.25 or $4.50 to $5 is the most common, but there's limited times in the past that is relatable. So take it with a grain of salt, as I've been saying. And could we see a rebound in corn soon? It's definitely possible. Moving on to soybeans, still the fundamentals are feeling more heavy than soybeans and other crops. Yet it's shown the most strength this week so far. Short-term and long-term technicals right around 50%. No, so not too overbought or oversold near-term or looking further in the past now. U.S. and world gauges are at 52 and 70%, meaning for the U.S., about half the prices in the past with a similar U.S. fundamental situation were lower and half were higher, whereas for the world, in the past, a similar fundamental situation, 70% of prices were lower than today's price. The dollar index and inflation, as it is with other grains, still reading a little bit overbought, pressuring the market some. And the summer gauge, right on that edge of green to yellow at 67%, saying it's still a decently strong market. And looking at fundamentals, this has a little bit more pressure than other grains. Soybeans have sent out 8 of 20 market alerts so far this year. We sent a couple out in early April, and higher prices could bring out more and larger market alerts. Here's the recent soybean market alerts so far this year. We've been hitting kind of those peaks in the market, and more could be sold here, but we're kind of hoping to return to the highs seen in January and February. There's a lot of growing season left, but we have to make the most of the market gives us, so we'll see how the market shakes out over the next 3 months or so. Moving on to price targets for soybeans, the crop insurance price is $10.54. First target is $10.79, which we almost reached in February. We didn't reach it, so we've adjusted that in the second one to 20 cents above the insurance price. $10.54 seems like a reasonable target for November. $10.74 seems like a reasonable target for November soybeans, and we are 50 cents below that price. We will see if we can make that happen or not. And moving on to historical soybean fundamentals and where the prices have been, we have a lot more occurrences than we saw on the corn chart. Soybeans have traded anywhere between $8.50 and $11.75, and we have traded near the higher end of that range recently. Today, old crop is 50 cents from the top end of that range, and despite retreating some, this data may be saying prices are more likely lower than higher from here. Moving on to July Kansas City wheat, we retreated to lows not seen since December 2024. But what do the confidence gauges say about that? Well, technically, both the short-term and long-term gauges are at 0% and 8%, meaning we're pretty oversold at the moment based on those factors. If we look at the fundamentals for U.S. and world, both of them are under 50%, with the world closer to 30%, meaning similar world situations in the past for fundamentals, only 30% of prices have been lower in those similar situations over the last 10 years. The dollar index and inflation have pressured this market some, and we're closer to 50% on that, so maybe not weighing as heavy as the other grains. Summer gauge, finally, we are reading below 50%. Not a good thing, as we've seen prices tumble, but this summary gauge may be leaning that we have a little bit more support here than we have. And could we see a rebound? It's possible. Kansas City wheat has had 15 of 20 market alerts for this 2025 crop sent out. Not more than a month away before harvest. Be ready to take action if we've seen good prices right before harvest at times. Not sure if we'll see that this year or not. The lows didn't hold, and we're hoping for some sort of rebound right now. It's really what we're rooting for at the moment. March was the last time we saw a market alert for wheat. Would be nice to return to $6 or even $5.75, as we've tumbled quite a bit. Kansas City wheat hit the first 2 targets in February when looking at price targets, which had been adjusted as we move through this crop season. Total of 20% sold, or 10% each. The next 2 targets have now been adjusted since then to $6.30, and we haven't hit those yet. May not. Actually, all 3 have just been adjusted. Price targets utilize crop insurance as a floor for your insured bushels and try to improve on that floor. If and when we don't get all those targets sold, the crop insurance price has a minimum revenue at harvest to fall back on. If we don't produce more than our insured bushels, we'll see some form of payment coming at these prices. If we produce at or more than our APH, that means additional revenue can be had with more bushels to sell. Looking at this, comparable prices in the past to current fundamentals, we've seen anywhere from $4.25 to $6.25, and we've definitely come off that top end lately. And it's a scary chart because it shows prices have been lower between 2016 and 2021 or so. So there's a few directions this market could still go based on that. So we'll see what happens in the wheat market. Moving on to livestock real quick. We're now seeing 3 of 3 indicators triggering for both live cattle and feeders. We continue to see strong trade, and we made new highs again this week. Cattle is tough to trade right now. Be sure to have a risk management plan. Talk to our Ag 360 insurance offices about LRP to learn more. Just a quick peek at hogs. We are now reading 3 of 3 on that chart as well, and hogs are trading pretty well enough to take notice. And then looking at diesel prices, we're looking for lower prices, not higher, for good buying opportunities. A couple weeks ago, we read 3 of 3 indicators, and we did last week again. We've seen some small bounces in price, but we're testing those again. And that's all we have for today. Thank you for listening once again to the Market IQ Report. Be sure to find us on our website or on social media. We often have daily grain market update videos posted on our socials. Contact us for any questions about anything we mentioned today, or if you're interested in any of our services. We'll see you next week.